You are one of my favorite people to talk to, not necessarily just about funding, but as it relates to all things finance. I wanted to get your insight on the future
Hi,
of
Jason.
Bitcoin because that topic has been in the news headlines for the last 2 weeks for not necessarily the right reasons. So before we dive into that, William, let's give the audience kind of a view of who is William, all the good, the bad, and the ugly.
Yeah. Well, let's start out with the ugly. I'll take my glasses off. It'll make it a little less ugly. So, uh, so yeah, I run BTC Partners Group and Fat Cat Mining, and basically it's one and the same company with two different names because it works with two different sets of clients. So Fat Cat Mining is more for your retail, 5 to 10 to 50 miners, and that way I can sit down with somebody. And Fat Cat Mining is okay, but Fat Cat Mining wouldn't work with with a company who's wanting to invest several $1 million or something. So with that, I've got BTC Partners Group, and anyway, both those companies are support the Bitcoin mining space in the Bitcoin industry, to go from like not knowing anything to being able to basically live on a Bitcoin standard and raise money and how to mine and generate revenue from your miners and what you need and how you accomplish that, and then how you spend it and turn it into spendable money in the U.S. dollar universe, and back and forth and stuff like that. So that's a little bit about business, and then about me. Um, yeah, my gray hair is real, and I've been military for 23 years, and been with the federal government for 13 years, and I retire soon. And I was working on my post-retirement business. And actually, really wasn't working on post-retirement business. I was working on just post-retirement, and I didn't want to have a business. I wanted to just retire. So instead of taking my TSP and all those funds and trying to live off my funds, which in this day and age, with the economy the way it is, you can't really trust that your money's going to sit there and do what you need it to do. So I decided to put it to use. So that's where I got into mining. So instead of sitting on, let's say, equity capital, I decided to turn that equity capital into working capital and bought mining machines. So the mining machines now generate revenue, and then I live off the revenue. Right? That was the goal. That was the aim. But when I went through all that and learned all that, I was like, well, this is probably something other people can um, need to learn and need to, you know, do for their own lives. And so that's where I became a consultant. And then the consultant led me into the previous story, which is Fat Cat Mining and BTC Partners Group. So, I think that kind of sums it up, Jason. If I missed anything,
No, so you've got
let me
two
know.
companies and Fat Cat Mining and BTC Partners Group. And if I understand correctly, Fat Cat Mining would be where a novice and someone new to Bitcoin mining would approach you. And then I believe you mentioned that the higher net worth, a little bit more, uh, uh, I guess, skilled in with Bitcoin mining would be at BTC Partners Group. Is that correct?
Yeah, yeah, but it's a little bit, yes. If you drilled it down and basically like with an eyedropper, that would be it. But BTC Partners Group also allows me to have an umbrella of other companies that I can connect with, right? So I can bring other companies up underneath the umbrella of BTC Partners Group, which allows Fat Cat Mining to not just be a mining company, but have all these other connections that support the whole ecosystem. So they, they're hand in glove, so to speak.
So I'm curious, and for personal and probably to listen to this again for myself. Take me from the military to how you got into crypto and as knowledgeable as you are today. Like, what
Uh,
led you into this? Because this isn't a field that, again, it's not for just everybody.
yeah, well, okay, so So when I was in the military, I had a pretty interesting career. So I started out as a cook. Okay, so as a cook, the reason I did that because I was young, dumb, and stupid, and the recruiter, was older, wiser, and well trained, and I was pretty stupid to the point where I didn't pass my ASVAB, and the only thing that I really qualified for was just a couple things, and I did pass my ASVAB, but I mean I didn't pass it at the highest. And if you're familiar with military recruitment, your ASVAB basically lets shows what you're eligible for. But at that time, they always need medics and cooks, right? Medics to go on the battle line and cooks to feed the troops. So yeah, so they kind of steered me into the cook direction. But once I got on board a ship and I did my 2 years, um, somebody said to me, and he was a pretty funny guy. We were in the galley together, and I really liked this guy named Trahan or something. But yeah, he was really funny. But he said, "Oh, um, he said, so what's your son gonna say when he grows up and people ask him, what does your dad do? And says he's a cook, and then the other guy answers and says, oh, just like my mom." So that wasn't really funny now, but then it was because when you're on a ship, everything is to the extreme because your sensory, your your sensory like experiences are so limited that things will. Anyway, I thought it was funny at the time, but I
It's
also
still funny. I laugh now in real time.
yeah okay. Yeah. But yeah, I remember that, and that was like 30 something years ago. But I was like, yeah, you know what, he's right. And I got a lot smarter by that time because being on the ship, being in the Navy, you learn discipline. I'd gone through some college classes because they had them on board ship. I realized that education was something that I really liked when it was done on my terms, not on like public education terms. So I really started invested in. I really started investing into learning, and in just 2 years, I basically probably learned everything I should have learned in public school, but really wasn't taught. Go figure. So I retook the ASVAB and I basically scored at like the highest level, and things were open up to me. And in the military, Creo groups are what are they like? They're like tiers that tell you where the highest demand is and where the over, the overbought positions are and the oversold positions are, right? And so I was like, man, I should probably change careers. So I went into the military. I went into weather meteorology, and it was the same time that Weather Channel was opening up, right? And the zeitgeist at that time, was like because of the Weather Channel was like the military was like we got to have our own weather people. So there was a huge like vacuum suction into the weather arena. Well, the weather arena was also like meteorologist slash oceanographer. So I became both of those, qualified, transferred over, and this plays into Bitcoin, and I'll explain why. Because
Absolutely.
what that did is it planted the seed of opportunity. So I was too young to understand that, but what I did take notice of was the fact that um, you start to see trends, and you got to take advantage of those trends while the trend is open, because it's going to close later. And that's what happened. So in like 2000, so this was in 1990 when I did that. And then 10 years later, the internet came out. People didn't need weathermen anymore because you could just go on the internet and find your own weather. And I remember thinking, hey, you know what? If I do this, if I continue to do this, I'm probably going to be unemployed because I'm going to be competing with beautiful women on the like when I retire out of military. What's my job um, opportunities like? Because I'm going to be an older person, and they're not going to want me on TV. They're going to want some beautiful young woman on TV, right? I'm not going to compete with that. And plus, with the internet, I don't really even think there's going to be a job for me. Well, just so happened, 2001, September 11th, changed the world. And after that, intelligence was the number one career field. So I saw the opportunity, I saw a trend, and I went from meteorology into intelligence. But I did that through oceanography because oceanography allowed me to get into a special program that was basically it was like subsea surface intel operations, and so I kind of like yeah. This is a long story. I won't put it on here. I mean, that's like not even a podcast. That's a book. The stuff that I went to, but it was really interesting, and so I found myself in the Intel program, and then in the Intel program, another thing happened, and that was um, geospatial sciences started to come online. So GIS is like what map making, but it used to be done with like cartographers, pen and ink, paper. That was the map making of the old way. But GIS started to come online, which was computer generated mapping with real time data, layered and everything else. So they needed people to get into that. Well, I just happened to be again in a job that I had seen as an opportunity, took advantage of it, got into this job, and then this was like a GIS job. But because I had this GIS experience, the Navy said, "Hey, we need you on our side." So they brought me in and then made me a geospatial intelligence specialist. So it was like I went from opportunity to opportunity to opportunity, being right in front of the wave. Right. So
Yeah,
I
starting
spent,
literally started talking about starting at the bottom, and I'm not necessarily
yeah,
saying this is the bottom, but from Cook to oceanography to Intel GIS, like wow, like, and yes, and this whole time you're describing, it's like you're following trends and intuition.
yeah, yeah. It really was. It was trends and intuition, but it was some of it was um, conscious intuition, right? But the first time it happened, I don't know that it was conscious. It was more like just I'd matured a little bit and understood the world a little bit more, and I understood I didn't want to be a cook, right? So it was more kind of like by luck and by a confluence of other things. But by the time that it had happened with intelligence, it had happened so many times that I had understood like uh, um, I had oh man, the word escapes me, but I had dissected what was going on and was able to put it together. Anyway, uh, going forward, then the same thing happened. I was working down at the now we're jumping several years. I mean, several years, and I was working down at the White House on a strategic initiative, and I was actually not at the White House. I was at the Department of Transportation for a federal government management um, fellowship program, and in that fellowship program, I was assigned to I had selected it, but I was assigned to the Department of Transportation working on a geospatial program. And that geospatial program was under the auspices of the um, White House Open Data Partnership. And so I was working there. And while I was working there at the GIS office, right next door was this office that was the chief data officer, and he was working on a smart cities project, right? So I'm working on a GIS, a geospatial strategic initiative, and right next door is working on smart cities. Well, that was kind of interesting to me. So I started exploring what they were doing next door, and I realized what I was doing was basically building the foundation for smart cities because smart cities are built on location based data. Like that would be one of the things that you would say a smart city needs to have is location based information, right? For transportation, everything happens somewhere. So we got to know where that where is. Okay. So then I took what I was doing and kind of reached my hand over into the cookie jar of the other office and started playing around with what they were doing. And when I got out of my assignment down at the White House, I opened up Smart Cities Group. And Smart Cities Group was just a social construct or a social organization through Meetup because I wanted to continue the work that I had done. I wanted to stay in it, but there wasn't anywhere I could stay in it. So I had to create it. So I created Smart Cities Group. And Smart Cities Group became like a thing in Washington D.C. A lot of people were there. We had like five events. I made some money. Companies were wanting to host it and sponsor it and stuff like that. I got invited to host an event at what is that, the big conference hall down there and everything. And I was going to do that, but man, they weren't throwing money at me. They were throwing bills at me that they wanted me to pay, and I'm like, I'm not doing this. So anyway,
Soliciting you.
um, they wanted money. So now Smart Cities Group, there's a CEO. I don't want to say I hired him, but there's a CEO that actually runs the program. So it allowed me to be able to step back from the operations of Smart Cities Group. And then now we go back into what I was talking about before, where I'm like, well, I want to retire. So what am I going to get into? Well, it just happened to be at the time when uh, Bitcoin was starting to moon in in 2020. Oh, you know what? There's two little pieces that I have to add to this before we get to where I'm at.
Please.
So in 2018, I was in Prague. Um, this was Christmas 2018. I was in Prague with my wife, walking down the main street in Prague towards, I think it's St. Joseph's Cathedral, which is in the middle of, no, that's Vienna. I'm thinking Vienna. We were on our way to Prague. And on that street, that main thoroughfare, there's a Bitcoin store. And I'm like, I never saw a Bitcoin store. Like, I've heard of Bitcoin. In fact, I heard about Bitcoin back in 2011, 2010, when a couple of years after it went out, and I was trying to figure it out. But it took a real tech guy to figure it out, and I wasn't that tech. I couldn't figure it out, so I didn't get involved in it. But I heard the name. I was aware of it. I had tried, giving it a rudimentary attempt. Anyway, walking down the street in 2018, seeing it, it happened to be the same day that Bitcoin hit its 2018 high of 18,000, or right around 18,000. I don't remember the exact number. I mean, it's several years ago and stuff. But you can imagine at a it was at a like a hyperphoric event. Like, I didn't know. I hadn't followed it, but that store was like so alive with energy. I walked in there and the bells were going off and people were whiz banging and everything, because these are people who probably owned it since it was less than a penny. And here they are, $18,000, and they're, you can imagine how much euphoria there was. So I didn't buy it, but that euphoria caught me. And then I went back out. I think I had a picture taken there at the store and everything. I went back with my wife. I didn't realize how iconic that moment was, because I didn't realize that was the peak of the 2018 bull run, right?
Mm-hmm, mm-hmm.
So uh, I also write a bi-monthly article for GIS, well, for a GIS magazine. It's GPS World, and at the time it was Geospatial Solutions magazine. So what I would do is I would try and like lower the effort on my own behalf by doing an event for Smart Cities Group, and then combining something that I was writing about with the for the article that I was publishing. So every 2 months I would try and have an event. I would publish an article about it, and it would all be like this immersive experience, right? So coming out of the Vienna Prague experience, my article that got published in March of 2019 was digital currencies in GIS, right? So at that time, I did a event, and that event was co-hosted, co-sponsored with the Washington D.C. Bitcoin um, meetup group, and it was one of my most successful events. Lots of energy in the room. People were still like excited because of the bull that had happened, just 3 months earlier. But I wasn't an owner of Bitcoin, so I wasn't really caught up in that bull. This time I was, so I
Unfortunately.
understand it. That time I wasn't, right? That time it was all about just writing my articles and stuff. So anyway, I became more immersive in Bitcoin, but I didn't buy it. I didn't even follow it. I went back to like writing my articles. That was my focus. Doing my events. I had a full-time job. I had Smart Cities Group. This, and I was going through university because I was doing some degree programs and stuff. So my plate was full. But then, um, so did I cover both things? Yeah, the event. Yeah, okay. So then now we go up to it's 2020, and I'm sitting there and Bitcoin's exploding, and I'm like, holy crap! I've been following this for freaking 10 years. I never bought any. Now the thing is mooning. I've lost my I've lost my freaking mind that I didn't like this guy who notices trends and jumps in them when they're like ahead of the curve, and I totally missed this one, even though I've been like out there with it the whole time.
Yeah,
Like,
as a
how the
person following trends and your intuition, I could see how you'd feel that way.
unbelievable. So I'm like, I'm not missing it this time. So 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 I bought into it, not at the peak of the bull, thank God. Oh my God, thank God. But I didn't buy it at the bottom either. So I bought it like somewhere in the middle on its way back down. And but that's where I decided to get into it. But when I got into it, I'm like, okay, Bitcoin. So this is the Warren Buffett, right? Why buy gold? Gold is just a metal, doesn't earn you anything, doesn't do anything, doesn't pay dividends. What are you going to do with it? So, the same thing with Bitcoin. It's like if you own a Bitcoin, it doesn't do anything. It doesn't pay dividends. It doesn't earn anything. It just, you own Bitcoin. Um, Good thing, but you want something that makes you money. So you want to put your money to use. So the next step then is to go into mining, because mining, you're generating Bitcoin. So you can take like right now, Bitcoin 17,000, let's say 18,000. Let's just make it a nice even number. So because it's 17, 18 right now. So let's say it's 18,000. So you could buy 9 miners for 1 Bitcoin. Okay. So 9 miners, I don't know, what are they going to earn? Like $6 a day. 6 times 9 is what is that? 36. What is it? Like $54. So you're gonna earn $54 a day. So you're gonna earn like is that like 1,500 a month? Okay, so 1,500 a month. So your ROI on that is going to be like 18. It's going to be like 27 months. Okay, that's kind of hard, but 27 months is a little over 2 years. So 1 Bitcoin in 2 years, your 9 miners are going to pay you back your 1 Bitcoin, and then after that, it's going to earn you additional Bitcoin, right? So now your Bitcoin is paying dividends. You follow me? So with that kind
Yes,
of
yes, yes.
logic, I'm like, that's why I got into mining. Well, mining is a whole new science all in and of its own. It's very easy to say. It's very easy to actually own 1 Bitcoin and just watch the price go up and down, up and down, up and down. Great. That's it. Mining, you've got difficulty adjustments. You've got the price of Bitcoin itself going up and down. You've got well, the difficulty adjustment is based on the exahash, and the exahash keeps going up, and you've got uh, yeah, I mean, you've got the cost of electricity that you got to account for. So you got all these things. So um, so now I'm learning all that. But because I'm learning all, and then you've also got the price of the machines, who you buy it from. There's people who will charge you very little, and you think you're getting a deal. Well, no, because they're going to take all your money and they're not going to give you anything. And then on the other extreme, you've got the ones who are overcharging, and if you don't know what you're doing, you're going to pay like 2, 3 times more than you really need to. So that's where I come in, and I'm like, hey, I know how to get you through this safely so that you don't lose your money and you don't overspend. So you know, let's let's get you set up correctly where you won't pay too much. Um, so that's where BTC Partners Group comes in, because now I can like build partnerships with these other companies that actually those companies are where you can put your machines at, right? So you can co-host or remote host with these other companies. So I have a lot of contacts, some international even, because there's prices that are different in the U.S. than they are elsewhere in the world. But risk um, risk goes up a little bit too. So anyway, all this stuff I've made a little bit easier for the average person, and so that's where Fat Cat Mining comes in, because I can just sit down with the average person and help them get into it. And then BTC Partners Group is where I've built like relationships with these other companies. So that's where I went from the Navy into Bitcoin, and still getting into Bitcoin, because now I've actually this week I'm a my SAM registration. So with SAM registration, I'm basically certified to do, government contracting and stuff. So, the other side of Bitcoin is blockchain. People think that they're two different things, but there's mining, there's Bitcoin, and there's blockchain, and they're all related, right? So the government doesn't like Bitcoin, but the government likes blockchain. Okay, so sometimes it's good to keep those two apart, and not conflate them, because if you conflate them, then people, they bring their dislike for one, and they start to, put it on the other. So sometimes it's good to keep those two separated, right? But they're actually all part of the same thing. So it's mining, it's blockchain, and it's Bitcoin. They're all related. So anyway, I got my government contracting, so now I can start doing working with the government, because the government on the like RFPs will go out, and sometimes the RFPs will go out for blockchain, because I want to get into some blockchain technology, so I can offer that. Eventually, I think they're going to start getting into um, mining, because mining helps to stabilize the grid, and there's other benefits as well.
Speaking of government, what agency or agencies are currently responsible or take care of Bitcoin governance?
Yeah, there's debate about that. So it's between the CFT and the SEC. So the Commodities Exchange, or the basically Securities Equities Exchange, or so. Um, do they want to treat it like it's a stock, or do they want to treat it like it's a commodity, like oil, milk, gold? Milk's not really a commodity, but cattle are. Um, you know, so there is a big debate now. Gensler, who runs the SEC, he wants it to be a security. Actually, no, I take that back. He believes Bitcoin is a commodity, and yet every time the CFTC tries to establish it as a commodity, there's pushback from Gensler, because he wants to control it, even though it's a commodity, and he's admitted it's a commodity. So the rest of the I'll call it digital asset universe is pretty much securities. Um, it's kind of hard to fit them into either one. It's almost like there needs to be a third category, but if you create a third category, then guess what?
Can you distinguish for me the impact if labeled as commodity or versus security, and then lead me into the why you postulate for a third identification?
Yeah, that's a question, Jason, that I'm probably going to speak above my head.
That's all right. I love those the best when we sound dumb. I'm shooting
Yeah,
from the hip.
yeah. I think it was Andy Griffith. I think it was, who said, no, it wasn't Andy Griffith. It was God, I don't remember him. But he said uh, that guy's educated beyond his intelligence, and
Ah, yes.
yeah, I don't remember who that was. It'll come to me in a second. But he was a funny fellow. But yeah, at that point, I'll be speaking about more than I know. So
Well, what would it mean if for you or the average consumer listening, and I guess you're right, let's keep it layman, and not get into the legalese, but for someone listening, why it matters between distinguishing between those two. And again, and obviously I'm jaded on your side I believe
yeah,
we should identify a third label.
yeah. Well, so there are things I can talk about that I do know that are with but the depth of it, I don't.
See, we're not
So
as naive as we pretended.
Yeah. So with commodities, you're pretty much just going to be dealing with capital gains. So if you bought it at this and you sold it at this, you're going to be doing the difference. Um, when it's a security, um, well, maybe not. So when it's a security, yeah. So when it's a security, it's like it doesn't fit the definition of security anyway. But when it's a security, um,
Like a regular stock,
what
like an exchange traded stock.
right, right, yeah, yeah. You know what? This is something I'm gonna have to reach in and I'm gonna have to find out a little bit more um, as to what the difference is and what the pluses and the minuses are. But there's three things, and one of them, and the third one would be a currency. So when it's a currency, then it's entirely different because a currency does not have a capital gains on it. So if you cannot pay if you bought a dollar for a dollar, but then you held on to it for 2 years and it went down or it went up, you can't declare a loss and you can't declare a gain. A dollar is a dollar, right? No matter how much milk it buys or doesn't buy, a dollar is always a dollar, right? So there's no capital gains on a currency. When it comes to the commodities market and the securities, yeah, those are a little bit technical for me. And I'll tell you this, I was trying to trade
Yeah, I
commodities
see
and
here
securities.
that Bloomberg has reported that U.S. regulators, including the SEC, agree that Bitcoin, again, the largest digital asset that we're talking about here, is not a security.
Correct, but every time they try and pass a legislation that puts it into a commodity, um, nothing happens with it. It gets no traction. It goes nowhere. So it's almost like they don't want it to. They want to talk about it, but they don't want to actually put any regulatory framework around it because they prefer it to be a wild animal. Because a wild animal is something that companies are afraid to invest in. Um, because once you start putting regulation around it, then companies can invest in it because they know where the risks are. They know how to. I'll just say they know the rules. When it's a wild animal, they
Yeah,
don't know the
the
rules.
main here is if it is labeled, and again, it's not, but if it was labeled a security, I then there's that, the internet's pulling up a lot of the Howey test. It
Yep.
essentially means that the companies issuing them must comply with SEC rules and regulations for reporting, and I assume that is the predicament that you don't want to go down. Hence, why we necessarily are not advocating to be labeled a security.
Yeah, and you know what? That's probably touching on the reason why, if it's a currency, it's a dangerous thing to be also because a miner could have regulations put on him that if he's generating Bitcoin, he's basically like generating some type of currency. And if it's once it enters the market, he's got to go through like some type of huge banking kind of regulations and stuff. And it's like, no, we don't want to do that either. So we just want to make it simple and and safe. Really, that's the world we all want to live in, right? Same thing with taxes. Make it
And
simple and
hence,
safe.
and since it is a commodity, it will thus, I believe we referenced this CFTC has
Yep.
ruled that it is not to adhere to uh, SEC regulation, and specifically the companies issuing the security or issuing the Bitcoin or the crypto non-security.
Yeah. I'm gonna write that down too to like look into and learn what's the difference. Like, what's the bottom line difference?
So tell me, how does this, as we're on this topic, I can't help but ask, how does, in your view, working in it, um, and specifically the mining, and if I understood correctly, you really got into mining, if I may be a layman, uh, to because you can make your asset, so to speak, work harder for you than say traditional gold, which comparatively speaking, you get marginal market increases, which again, I use the word marginal comparatively speaking to what you potentially could make in Bitcoin mining.
Yeah, well, so if I was to mine gold, uh, yeah, you could pretty much forget about it. It's like going back to uh, the gold rush 1800s with shovels, pickaxes out in the sun, chipping
Very
away.
resource heavy industry, just to say the least, because it's a very traditional take on the word mining.
Right, right, or right. So the way I could afford it would be like a prospector, right? I wouldn't have the billions of dollars to invest in a huge mining operation. But that would be the other way. Would be you got to invest in all that infrastructure and that huge machinery and everything else. And so gold mining is like, yeah, you really can't get into it. It's like the big companies that are in it. God bless them. Good luck. They're the ones that are going to stay in it. You're not really going to break into that space. So how do you get into something that's equivalent to gold mining then? Well, you can own a Bitcoin mining operation for $2,000 a machine, right? And then $2,000 a machine is going to earn you about $60 a month at today's prices. That's gross. So you take out I said $60 a month. Yeah, per machine, right? And wait a minute, $6. No. $180 a month gross. So um, yeah, yeah.
So
So,
really, it's
so
the
you can afford
returns,
it.
and also it's kind of poetic in the sense that the Bitcoin mining is being backed by blockchain. What you're describing is the decentralized nature that you could get into it, whereas obviously gold mining, I say obviously, but I guess it may not be obvious, is not exactly as, so to speak, decentralized.
Yeah, you know what? I didn't realize it, but you're exactly right. The example I gave with you can't get into gold mining because it costs too much money. So it's very centralized by the large companies. They're doing it. They're pretty much going to remain the ones doing it because nobody else can afford to get into it. Whereas, yeah, you can afford to get into Bitcoin mining at $2,000 a machine. So very decentralized. Almost anybody can get into it.
How does the recent FTX for debacle like impact you inside the industry?
Uh, so in the short term, it's a setback. But in the long term, it's it's a setback in one way, but it's a step forward in another way. So every time there's a bull run in Bitcoin, the other altcoins they also prosper because it's like people don't differentiate Bitcoin from crypto. So they, if you're an insider, you understand the difference. But if you're an outsider, which the majority of people are, then Bitcoin is just like the largest, but they're all the same. So when Bitcoin begins to run, then all of the altcoins also begin to run. Well, the thing about the altcoins are you don't know what they're really based on. Basically they're ether dust. So there's nothing really behind them. They're just taking advantage of the rising boats or the rising water lifts all boats principle, and they're all going to rise up until Bitcoin goes into its bear market, and then all all the fake stuff evaporates. So FTX was, you could say, the largest. Maybe not. Maybe there's still a couple more that will fall, but it was the largest of the boats, so to speak, before it also hit the rocks. Um, but it was built on nothing. Like when it did collapse, they did not actually own any Bitcoin.
And
So
that's a key
that means
differentiation. I'm glad you brought that up, in that it's not even size or what happened, it's what was underlying it, which with FTX is not, as you're pointing out, nothing.
pretty much nothing. So there's two reasons why that would happen. One is because they didn't like Bitcoin to begin with, so they didn't really own any of it. And the whole thing was a big fraud, a big scam, which is kind of what we're finding out FTX is, and was the whole time. And the other reason is because Bitcoin sells off first because it's the most valuable asset. And when you go into a bear market and you've got to pay your bills, then you sell what is most liquid and what is most valuable so that you can pay the bills. So sometimes when a company does actually go belly up and declare bankruptcy, they don't have any Bitcoin on their balance sheets because they sold it all because they had to meet their bills, and it wasn't enough for them to survive. That would be one reason, but the FTX reason was because they didn't really own it anyway. They never did. They didn't believe in it. They didn't like it. They couldn't control it. So, and they couldn't like go in their back room, make it in 5 minutes, and then put it out on the street as some new coin, give it some fancy name, and raise $1 million in a weekend, or $1 billion in a weekend. So FTX had a shit model anyway. Pardon me.
Correct. That's correct terminology given the example.
Yeah, but yeah, they had well, they were a fraudulent model to begin with, and so it's good what happened because you get rid of that fraud. Hopefully, they will. I mean, I don't. Nobody wishes anything bad on anybody, but when somebody does what he did, when somebody does what he did, and the reason you have to wish bad on him because you have to go, okay, well, the next time Bitcoin goes into a bull run, we don't want to see the same things repeat, right? And so, how do you keep the same things repeating? Is because you got to make SBF an example so that everybody else will be afraid to ever do what he did, right? Because you can make frauds every time there's euphoria in the markets, right? You could be a Bernie Madoff or an SBF and make a fraud. The only thing that's going to prevent that is when people are like too afraid because the consequences are too strong, right? So if nothing really happens to him, then we're going to see it happen again and again. But if they make an example of him, then yeah, it'll maybe prevent it from happening in the future. Plus, this is a very unregulated market. Like Congress is still not regulating it. Many of us believe that's the good thing anyway because we want it to be safe and simple. Regulations make things treacherous and difficult. So we it's a careful walk when you bring regulation into it, but there needs to be some regulation to protect people. But there is really no regulation in this market. It's very, very limited. So yeah, so I'll just leave it at that. When it comes to Bitcoin, it's almost like it's self-regulated because it's a mathematical protocol. You can't screw it. You lose it if you don't follow the rules of the protocol. You don't screw anybody else. You screw yourself because you didn't, follow the rules of the protocol. It's very difficult to um, to screw around with it and do anything fraudulent with it. That's not to say
mathematical based.
Yeah, it's not to say you can't scam somebody out of their Bitcoin or out of their money or something like that, but you can't do it on a broad scale.
What I'd like to see, I did see a report, which I think is very astute, from the data and insight from Morning Consult, reported that post FTX, regarding the question I've asked you, how does it impact? It seems, according to their data, that the drop in purchase among crypto owners hasn't actually been as severe as one would assume, given the FTX news. And I'll try to quote some data here. Just over, like before the news broke, just over 1/5, again, this is according to Morning Consult, of U.S. adults said they're likely to purchase cryptocurrency. And that's, so again, 21% compared to 25% in October. And 26 in January. So you see, the intent to purchase has pretty much maintained steady throughout the year. it's needless to say, or to summarize, they're not scared off by the beginning of previous year's crypto winter, and they're not scared now due to FTX's news breaking. And I'm going to quote this graph, and I'm going to go back to another company which I was involved with, which was Celsius, which that broke in June. But and I'm going to divide it, and I'm going to speak between two users, and one is crypto owners, and then all others. So other people that are not. So the intent to purchase in January was around among crypto owners, so people like you and I, was 70%, and now it's like 69. Whereas in June, for all adults, it was like what I mentioned earlier, 26, and now it's 21. And that's kind of it really gives insight to the tolerance of volatility that crypto users are willing to bear. Now, I think FTX filed, what is it, November 11th? They filed for the bankruptcy. The news broke. Again, you don't see any, at least in November's report, you don't see any significant downtick in the purchase or volume of Bitcoin. Not nothing that I think some of the headlines lead you to believe in, that this is it, this is the Armageddon. That's not exactly what the data is showing. The data, yes, there was a little downtick, but we've had this similar exact downtick before, right? When Celsius, the Celsius network paused all withdrawals, and I didn't have Celsius token, but I was using their platform really to convert, but that's another story. But again, my point is that it seems like the crypto audience is bearing the storm.
Yeah. So there's some guys who study Glassnode. The two that I like to listen to, well, three that I like to listen to are Willie Woo, Dylan LeClaire, and William Clemente. So I've been so busy this last week and a half that I have not I have not stayed up with my podcast. So uh, where am I going with this? There's this um, measurement in Glassnode, which is a platform that you can get all this data from, and it shows where everybody is in relation to what is the average buying price of Bitcoin and what is the price of Bitcoin now. So you get an idea percentage-wise how many people are underwater, or how many people are in profit and how many people are underwater, right? So it's just a one number percentage, and I think it was something. Yeah, I don't remember what the number is, but because we're talking 3 weeks ago.
I'm sharing my screen. I'll share my screen. It's referencing the kind of same graph. I found the article I was referencing, but it's referencing the graph that you're referencing now. It's got the price. Now the prices, it looks like a bigger dip, but this only goes up to November 22nd, as you see. And again, it's split it between crypto owners. And it's higher. It's higher than this. This is, of course, this was last reported November. We're all the way up to December 16th, so that makes a difference. But you see, it's not as big as a drop as you would assume, even in the price, the total price. But the price is very volatile, which I'd like you to speak to the volatility of it.
So this is the price of Bitcoin, but it's not the price of Bitcoin. It's the percentage of people who would still invest in Bitcoin, and it's relative to the price, where it's
yes, that's correct. That's the graph. And yes, and here's the key. This one only goes through really October, right there.
Yeah. So what this is saying, what people, this is a sentiment indicator is what this is. So if you scroll back up, what this is people believing that the price is going to go where it's going to go in the next 6 months. So people hold on to Bitcoin believing it's going to go up. Eventually, it's like in the short term or in the long term. If you think in the short term it's going to go down, then you probably short Bitcoin. If you think it's going to go up in the long term, then you just look at at the price trend when it's going down as buying opportunities. So, you know,
The
Bitcoin
forecast
is
at the time of this in November, crypto owners were predicting 17.5, and I think we're already floating near that even before the end
yep,
of even before December closes.
yep, we're there now. Yeah, in fact, we're 17.8 2 days ago and 17.1, 17.2, 17.3
So if
yesterday.
if this section about the prediction, the Bitcoin owners seem to have it on par. Right?
Yeah, yep. Wait a minute, it said 15.6 at press time. I think
Yeah, at the time of this being, and this was published. When was this published? Doesn't have. It has a date of 11/22, but that graph particular said that data
okay,
had
so that
came
was
in from October.
yeah, you could say that was a flash dip that was caused by the FTX collapse, but it was a
Yes,
flash
FTX.
dip. Yeah, it didn't last long. It went right back up, as you know, and it
I
stayed
like
where it
this
went.
though. The sentiment is generally positive. Again, it's counter to what you may think. They're concerned. Yeah, they're concerned about FTX, but they're more likely than not to say cryptos will still be around in 10 years.
Well, so crypto is so when you think about FTX, you're really talking about crypto.
Yeah, at large, not
So
specific Bitcoin.
yeah, you're right. So Bitcoin, yeah, exactly. So Bitcoin is not crypto. What the two differentiating things on it are the the proof of work protocol that separates Bitcoin from most other digital assets is the proof of work, and then the second thing is the network effect. So you know, Bitcoin basically is accepted, adopted almost all around the world. So you've got the huge network effect there, and then you've got the proof of work. Those two things are what really separate it from everything else. It's because most of the cryptos are basically like built on spreadsheets. Um, some maybe advanced version of a distributed spreadsheet, but there's no mining taking place. Like, Ethereum just had its big conversion from proof of work to proof of stake. Well, proof of stake is just basically a distributed Excel spreadsheet. So um, it so it's basically a crypto. It's a crypto minus the proof of well. I, I'm going down. I'm going in the wrong direction here, but there's a big difference between the two. So
Mm-hmm.
yeah, so when you talk about FTX, you're really talking about crypto because it didn't really have any Bitcoin on its balance sheet anyway.
And really, it's the
So when
protocols underlying or that mathematics underlying it, which some crypto, as we see with FTX, has zero, whereas Bitcoin, that is not the case.
right, so Bitcoin, so things have to have some intrinsic value. With the U.S. dollar, the intrinsic value is the United States that's behind it. Um, with Bitcoin, the intrinsic value is the energy that has been consumed to create a Bitcoin. And it's not just the energy to create one Bitcoin, but because of the blockchain, it's built on every other Bitcoin that's ever been created behind it, right? So uh, it's a protocol that goes back all the way to the Genesis block. So that is like the stability behind Bitcoin. So that's its intrinsic value. With everything else, you have to question what is its intrinsic value. That's what Sam Bankman-Fried basically had discovered was with the euphoria, you don't have to really have any intrinsic value. You can go in a weekend, create create some token out of thin air with a program, trade it back and forth, FTX Alameda buying it to make it look like there's lots of trade going on, run the price up to $100 a coin by Monday, and then you've got like people buying into it because they're looking at the graph, which is up and to the right, and they want to, jump in and get a piece of this. Well, it was all like make believe to begin with, right? So that's crypto because you can do that with it, right? It's just internet. I wouldn't call it internet money. It's just it yeah, it's make believe.
Essentially less than, but under the umbrella or under the saying that it's internet money, though, again, to your point, the intrinsic values just lacking or not there.
Right, and there was nothing that was adopting it. So it didn't even have like a white paper use case. Like Amazon points are in a form are a form of crypto money or internet money, right?
Mm-hmm.
Every time you buy on Amazon, you get like 5% or 3% or whatever back, and that goes into like some account, and then at the end of the year, you can use it like a Christmas uh, savings account or whatever. So. Um, it adds up to $300 at the end of the year. Well, that's internet money, but that has a use case, and it has a purpose. It has a network effect, but it's very centralized and it's only used internally, so it doesn't have a network effect in the sense that it can be adopted and used outside of the Amazon. Amazon is pretty vast, and I think you can use it in Whole Foods as well, but you can't use it outside of the Amazon universe. So.
Speak to me about Bitcoin use cases, specifically Bitcoin moving forward, looking for, again, speaking futuristic.
Well, so right now the U.S. dollar has, because because of its power, it was able to basically weaponize itself, and um, it should never have done that. When you are the world reserve currency, you should have. Well, when you're the world reserve currency, you cannot. You have to remain neutral. If you do not let your currency uh, be neutral and it's the world reserve currency, once it takes a side, it's no longer the world reserve currency, right? Because it's taken a side. So it's not neutral. So once it did that, uh, wherever your political um, or wherever your politics are, however you think about the Ukraine invasion and stuff like that, it doesn't really matter. What really matters is that the dollar became weaponized and picked a side. Well, once it picked a side, um, then now it's no longer the world reserve currency. So the other side, which are the ones who have been sanctioned, um, like Korea, Iran, now Russia, and and I don't know, is Venezuela on that list? Probably. The list is uh, yeah. So they are now trying to figure out how to trade outside of the U.S. dollar. The U.S. dollar has been dominant for so long that so many systems are built around it, like the SWIFT system. So international trade is done in U.S. dollars. The petrodollar system um, is basically what backs the entire world, right? Like countries all around the world have to buy U.S. treasuries and then trade those in for oil. But now the world is one getting away from oil, trying to get away from oil. So that kind of has an impact on the petrodollar system. But the biggest news is that Saudi Arabia wants to align itself with the BRICS, right? So the BRICS are Brazil, India. Well, let me see. Brazil. What's the R? Yeah. Brazil, Russia, India, China, and South Africa. Those were the original BRICS. They were at first an investment category for stocks because they were an emerging market. Um, then they became a political alliance, um, as we're seeing now when the world divided. Well, Saudi Arabia has decided it wants to join the BRICS, which means it's no longer going to abide by the petrodollar system. So it is going to trade in uh, outside of the U.S. dollar for oil. So it is, I think last week, if not last week, the week before last, at the Arab Accords, I think they were held in Algeria. Saudi Arabia is now going to be trading oil for yuan, right? So Chinese yuan, no longer U.S. dollars. That's a huge impact to the U.S. dollar. Um, Here in the United States, you probably don't hear about that. They're not going to talk about that, but that spells a lot of doom, a lot of danger, a lot of panic is like on the horizon coming our way, because what happens is the reason that we can get away with so much here in the United States is because we can export our inflation, because we sell treasuries. And what that does is we're exporting our inflation. We're distributing our prices internally across the globe. Well, when Saudi Arabia says that they're going to start selling oil in yuan, well, we're not distributing our dollars across the globe anymore. Now we're just distributing them halfway around the globe, wherever that line is between the bricks, because they don't have to buy U.S. dollars anymore on that side of the political line, right? Now they can buy yuan, but they also said they will accept gold, right? So whatever they choose to trade in is, if they're not trading in U.S. dollars, it means the United States has um, less buyers. Well, when there's less buyers, then it's condensing how far you can spread it, which means the impact is going to be concentrated more at home. So I don't know how we're going to get rid of inflation when you just can't distribute it, right? So um, even though this last CPI report came in lower, I don't think that's going to last very long. Well, how does that affect Bitcoin? Well, if the other side of the political line is trading in yuan and gold, well, first off, I don't think many of those countries want to really trade in yuan, because then they got to answer to China. But trading in yuan is a lot easier than trading in gold, because when you trade in gold, well, you got to store it, you've got to keep it safe, you've got to transport it back and forth, you've got to do all the accounting of gold, you got to do assays, which are the fancy term of making sure that the gold is really gold, not tungsten or lead covered in gold, right? You got to do all this stuff. So it's very expensive to keep gold and trade in gold. So what's going to happen is they're going to have to adopt a digital currency, because commerce can't happen faster than the flow of money. So if the money is is gold, then the flow of gold is very slow. So therefore, commerce can't happen that much very fast, right? You can't buy um, a million barrels of oil, and then you've got to transport all that gold to whoever produced the oil, account for it, all that and everything. Now that takes maybe 3-4 weeks. Once that's done, then you buy another million barrels, right? So it slows down commerce. So the only way that commerce can happen is really on a digital asset at the speed that commerce needs to happen. Well, how are you going to do that? You got to do that with the most trustworthy digital asset. So with the collapse of FTX, one of the things it proved is how untrustworthy most of those digital assets are. So you have to then go to, well, what are the most trustworthy assets? And Bitcoin's going to be at the top of that list. So there may be some other ones that they're going to try. Um, and I wouldn't doubt that they would definitely try things like Monero. Um, Ethereum is programmable, but Ethereum itself isn't really tradable. It's the things that are built on Ethereum, like USDC and USDT, that are probably going to be traded. But again, that's like, it's US denominated. So they're trying to get away from that. Then they probably don't want to go there either. So they're going to go into some digital asset, which is probably going to be Bitcoin.
Yeah, the my take to this point, some of the top, when you're looking for currency and security, despite FTX and whatever the headlines may cite, Bitcoin is objectively one of the main benefits is the security, or the use, in security being defined as, user anonymity and its transparency. Again, despite FTX, it makes it think that that's the opposite. And I'm not saying it's 1,000 or 100% transparent or anonymous. But as far as any currency, I think it definitely sets the bar at the highest. So to your point, that is one of Bitcoin's flexes.
Right. Yeah. Yeah. I like that. It's a Bitcoin flex. Right. Right. As long as you know how to do it, um, which isn't difficult to learn, but as long as you know how to do it, and you yeah, you can transact in it like almost instantly. I could send you however much money I had, I could send it all to you in 10 minutes or less, right? So it would settle and be in your account. With smaller denominations, I can settle it
I think that
instantly.
isn't that one of the most common use cases right now of Bitcoin is low cost money transfers.
Yep. Yep. And then,
I'm sure there's multiple other ones. But I think that one's one of the most well-known uses for specific Bitcoin.
Yeah, it's that. And then there's other protocols being built on top of Bitcoin. So Bitcoin is the base layer. And then on top of Bitcoin, there's an application called Lightning. And Lightning is interesting because it's instant settlement. So Bitcoin has 10-minute blocks. So whatever happens in this 10 minutes, you got to wait till the block settles. So, whenever that block settles, that 10 minutes is up, then a new block will start. And so you got like a 10-minute in between from, before things settle. With Lightning, it's instant, right? So you hold up your phone with a QR code. You could put like if you had Lightning, you could hold it up in the webinar or the web screen. I'd be able to, take a picture of your QR code and immediately send you money, just that quick and easy, right? Well, I say send you money, send you sats, right?
Correct. The Lightning Network, yes.
Yep.
And zero fees. I've noticed. I Googled them, and one of the things I like that I'm seeing is the zero fees.
Yeah, I don't ask me how companies make money. I never understood how Google made money.
Google's an advertising company that parades as a search engine.
Yeah, but everything's free, right? So it's really amazing.
Oh, it's free. Well, no, I won't say. I'm going to say something terrible. Something is only free, and I'm speaking business at large. Something is only free if you're the consumer. I mean, if you're the product.
Right.
Which I think Google makes a product of all of us.
Yeah. Yep. All of our data. Now, on top of Bitcoin, there's a third layer, which is what they're developing now, which is built on something called Taproot, and it's allowing smart contracts to be built. So that's pretty new. I'm not well versed in that, but it's just going to continue to build and develop. So there are these altcoins that have use cases, but those use cases are built on insecure networks and insecure protocols. So with Taproot is allowing all those use cases to be built on the Bitcoin network, which is a very secure network. So, again, those use cases for crypto are kind of like disappearing because the competition is much more secure. But I understand for you've got speed versus security. So right now, it's like Bitcoin protocol for Taproot just came out last year. So if you wanted to build something before last year that allowed some of this stuff to happen. You kind of had to go the crypto route, but now it'd be wiser to go the build it on Bitcoin using the Taproot route, because it's caught up. So what that means is people who do that, the competition is going to be, well, we're going to build smart contracts on Bitcoin, and then the competition builds it on whatever it builds it on. Well, which is more secure? Well, the one that's more secure is going to win. If price is not going to be a factor, and when you're talking such a low cost, you're going to go with the one that's most secure. So these other crypto are going to just kind of like evaporate. So again, that means that the use case for Bitcoin is more improved, and we're only talking, and we're talking like layer 1, layer 2, and layer 3 is just developing, right? So I'm not going to like postulate on layer 4 and layer 5 because I don't even know what really a layer is. But when things get built on these layers, and I don't know how much can be built on a layer. So like how much can be built on layer 3 when we're talking smart contracts? What else can be built there, right? So like just so much could be done there. So the other thing is Bitcoin is the SegWit also increased the security of Bitcoin. So and then you've got things like Wasabi and Samurai Wallet, and Sparrow, which also allow more anonymity to be introduced to transactions. So you get these things, and you're kind of like just eliminating the competition because why use them? Like I could see a use case for Monero, definitely, right? You want to be absolutely anonymous, so you use Monero, but Monero doesn't have the network effect. It's not liquid enough. So you buy it, you're nobody knows your identity, but when it comes time to sell it, you got to sell it immediately, or you don't know what's going to happen with it, right? So the best thing I think to do then is just do it in a Bitcoin using SegWit and put it in a Sparrow wallet or Samurai wallet or Wasabi and whatever, and you're pretty much then you're anonymous.
I want to touch back on another previous point that you mentioned of security and moving into the Lightning Network specifically, and kind of the innovation that it is in that instant verification or validation. I was miner specific. I'm speaking to miner since that is your subject matter expertise specifically. It's and this question is going to lead into the real where I'm going, and I'll start broad. Do miners validate smaller transactions? And you can see I'm teeing this up for security and that where vulnerabilities can happen.
No, miners don't. Miners do not validate. Those are the nodes that do the validating. Miners are creating the blockchain. So you could say that's like, so they're not doing the validating.
And that's where when you're using networks like this, it's where I think they call it the routing fee comes in. But this is where as a user, I'm delayed because the validation is what I think the Lightning Network, as you mentioned, is so innovative in that instant. There's no delay. It's validated. And yet that answers a whole huge problem. One, but I see the security issue. If it's not validated, again, I guess we don't have to do a whole dissertation on the Lightning Network, but seems like that's what I'm asking because it's just baffling. And good news, I'll say that because if you could validate instantly, I just see that the use case of Bitcoin specifically just tremendously is compounded and expanded. Because again, there is that as otherwise that 10-minute delay.
Yeah.
But
So
if
with
you
lightning,
don't validate, see, well, there's a security risk because that won't close, and somebody, some third party eyes, wherever they are, whomever they may be, can intercept and do whatever hackers do in that position.
yeah. So nodes are the reporters. So every time there's a transaction, all the nodes are reporters, meaning every node reports out and says, yes, this transaction matches my records, right? And every node basically tells every other node, yes, 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 yes. If you get a node out there that says this one does not match, it means somebody's trying to slip something in there, right? Now, all the other nodes do not accept that one. And so that node will not be accepted into the network. So when the next 10-minute block happens, all the yeses are now like basically chiseled in digital stone, right? And then the whole thing begins again. So no knows will basically process through the system, right? Now with Lightning, what happens is it's not based on the 10-minute clock. It's not based on that. It's based on if you and I open up a channel, um, we can keep that channel open as long as we want. So we can keep it open for minutes to do one transaction, or we can keep it open for months. You have to have money on the system to be able, or you have to have Bitcoin on the system to be able to keep that node open, right? So it means, let's say we're going to be transacting in $100 uh, amounts. Okay, so that means we cannot transact over $100, but anything under $100, we can transact in, and all it requires is you to put in 50 and me to put in 50. So now we have $100 in this node, and $100 can move through that. What we can also do is we can open it up for other people to use that node. So now our node has become a hub, and every time money travels through this, it's like a little tiny pinch. It's not 1%. It's dust. But if enough people move through that, that node generates income.
Yeah,
So
I think, and I'm gonna
if
separate that from fee, and I meant from what is traditionally charged as fee, the gas. Call that just the routing fee because that's what essentially we're describing. It's routing,
right,
and again, this dust, it's marginal, but that creates a risk, does it not? Because if it's so small, why would the node want to validate? Again, I assume I understand if there's volume, like if you do
yeah,
create the hub, but if you open and again, you're only getting this dust. That that just seems like to me it would remove the incentive. And now I've done shot myself in the foot and went backwards.
no, you haven't. Um, so look, it's one of the things that I'm actually wanting to do with Fat Cat Mining or BTC Partners Group, but it's like I'll say it's further down the road, but to create a transaction hub because it is going to be um, a revenue generating stream, but probably not much. But everything kind of
Again, less
centralizes
than
over.
1% to quantify.
Yeah, yeah. But if you have a hub, now I was just saying $1, but if you have $100,000 sitting in there, first off, where are you going to put $100,000? I mean, there's very few places you can put it. So if you put it on the Lightning Network, then it sits there until you want to spend it. But if you don't want to spend it, it allows money to push through your hub, right? So it's just constantly shooting through, and little pinches of it are coming off of it all the time, right? And the bigger it is, the more money can move through it. So, so it allows for more transactions. So if you have a large hub, it's kind of like if you look at a map at night of the Earth, you see hubs, right? They're the cities, the bright lights, and then you see the little hubs, right, of the smaller lights, and you see the connecting roadways and stuff. But from a map of the sky, you just see these like it's just like almost like neurons in the brain, right? But they're just things shooting across all these light networks. Okay, well, every time they go through a hub, a large major hub, that large major hub is making a little bit more, but that dust adds up because over like, how much, what is it? Like I heard something like $41 trillion moved through USDC this last year, or maybe it was $4.1 trillion moved through USDC this last year, right? So I don't know what amount of dust would come off of, $1 trillion, but probably a pretty substantial amount it adds up to. So if you can have a hub that much money moves through over time, it's it's like one of those trends that right now doesn't make sense because why? It's like you'd be lucky to make $1.50 a month maybe on that, right? But later that $1.50 you might be making $1,500 a month because so much money volume of money is moving through it. Because it's like Lightning doesn't work through one channel. Like if I send money to you, I'm actually sending money through like 8 different channels, right? So for the money to get to you, it's going through like 8 different these little nodes, right? So one of those nodes is probably going to be a major node, right? Because it's open and it's um, yeah, because it's open and it's got so many connections to it. So one of those, so every little piece of money that moves in the Lightning Network is going to go through like a major hub, right? So if you can create those hubs now, they'll become the major ones later. So it
Can
probably would be.
a can it during a even through this hub, even like as described with Lightning Network and the one you're referencing, being more taking more of a part in moving forward, can those theoretically, like a bad actor, like during a malicious attack, a bad actor open and close uh, these nodes, in which ultimately I would see if you're speaking of traffic, it would congest because that when it would congest the good traffic. Now we're back to the original problem of one, I'm still at risk, and two, now I'm delayed with all the traffic of the fake accounts. Well, not fake, but the bad actor accounts being opened and later being validated as non-valid accounts. But again, really what I'm asking is that still slows me down. Now we're back to, and I'm only asking that in part because it seems that when you speak of volume transaction, it's almost inherent that 100% of them will not be above board. Therefore, the question becomes, how does the bad actors opening and closing delay and cause that congestion, and what does that impact look like?
You talking about like a DNS attack on a Lightning node network or something?
Correct, or you're just simply opening yes, specifically, uh, or just starting various payment channels. If the bad actor was to create, fake payment channels only to close them, that's still got to be validated through that hub, and ultimately the problem, as I see it, is the congestion.
Yeah.
Now we're
So
back to like no hell. Now we're back to like defeating the purpose.
yeah. So the way it would
As you
work,
can see,
Jason,
I've done
is
talked myself scared here.
yeah, no, it's okay. So the way it would work is you don't have any control. An operator does not have any control over what hubs gets used. So what happens is when I click send to you, the system will like ping. Um, let's say it'll just send the ping out, right? Like 360 degrees, everything that's open, it'll ping and it'll come back and it'll say, like we're open, right? So if it's congested, it'll not ping back. It'll say, so that means that network is full. So it'll send dust. I say dust, meaning let's say we send $100. It'll break that $100 up over like let's say 10 different pathways, right? So each one is going to get $10, right? So it sends out like 300 pings, but it's only going to send $10 to the first 10 that come back saying we're open, right? So you don't have any control over that. But once it goes to the next to that 10, then it's going to do the same thing again and repeat it, and it's going to go outward and outward and outward until it gets to you, right? So there's no control over. The only control I have is who I send it to ultimately, but I don't have any control once. I click send on which pathway each one will take its own different path, right? And then they'll finally wind up to you.
So ultimately, congestion really isn't an issue here.
No, and the whole thing about Lightning is the more people who open up a network, the the more the more decentralized it is, so the less congestion there will be. Or the less possibilities of congestion. If there's only two people on the network or three people, then yeah, it's but when there's millions of people, it'll always find its way.
Are you aware of what Singapore is testing out? The project Ubin, or however it is pronounced. Let me Google it. Make sure I'm referencing something correct. And I'm going back to, again, I'm swinging all over the place. It is, and let me get some reference. Let me phrase this for you and I guess anyone listening. My understanding of crypto at large, and I'm going to start backwards and end with Bitcoin. You have the utility, which they're cryptos for specific purposes. Ripple is the only one that's coming to mind, and then you have your platforms. Obviously, that's to eliminate middlemen. I'm very layman here, but Ethereum being the prime one. Platform type cryptocurrency, and then your most common is we're talking about transactional, which is your Bitcoin, which transactional. It's exchange for goods and services. You were mentioning cryptos in specifically Bitcoin and its role within central banking, and how the dollar back, everything's it's essentially tied in. And I just remember referencing, and I'm going to Google it here in 2 seconds. About Singapore's government trying something as far as crypto and dealing with their current central bank or lack thereof, or to, again, I'm not going to say this officially, but to have another alternative than the US dollar, which that may be the primary motive. Who knows? I don't necessarily know that Singapore is our enemy, so I won't say that that's a primary cause, but heck, it could be, because again, everybody is backed by most of the developed world, at least, is that dollar plays a very current role. So if you wanted to undermine that and create your own central currency, now that has another problem. And actually, I have 1,500 questions popping in my head about how do you enact a digital currency from a government scale when you're talking about an entity that there is no central banking, and the question I'm kind of assuming that Singapore is setting up is it's the currency without a centralized banking system. Which let me start with, have you heard of Project Ubin? And again, the reference being the transactional Bitcoin being the transactional cryptocurrency, intended to eliminate the need for government issued currency, or, as I keep saying, central banking.
Well, I will say I'm not familiar with the project that Singapore specifically is working on, but there are many countries around the world that are working on central bank digital currency. Singapore is maybe working on something different. UAE, Saudi Arabia, Bahrain, Dubai, they are all working on cryptocurrency initiatives that that are going to open up, I'll say, banking or financial transactions for the population. I don't know these, so I would say that decentralized is not a scale. You're either decentralized or you're centralized. Being
Correct.
centralized is a scale. So you can have a sliding scale on how centralized you are, but you can't, like, once you cross into decentralized, there's only like you're no longer centralized. But once you start to centralize, you can have a scale on how centralized you are. I'm not proficient enough to know. Well, I don't want to say I'm not proficient. I haven't looked into it enough to know what Singapore, Dubai, Saudi Arabia.
But there are multiple ones. I've only referenced largely. I keep seeing
I know
Singapore all
that they're working. Yeah, I know that they're working on ones that are less centralized. Now, I know that the United States, that European Union, China, they're working on ones that are very centralized. So they're basically working on digital central bank or central bank digital currencies, which are nothing more than just digital versions of the current system, right? So I don't really see a benefit
Yeah,
over
that you're
what
you're
they're.
precisely right. In fact, distributed ledger technology, as I understand it, is only nothing more than a means of transforming payments, clearing, and settlement, which is, as you just very well said, essentially what we already have. I
Yeah,
guess the
yeah.
benefit would be it'd be cheaper, I assume.
Cheaper, and they have much more control. So, like, one of the things that I think added to the boom in Bitcoin in 2020 the uh, was the PPP payments that went out to everybody. People started buying Bitcoin, putting the money into it, and so it kind of like pushed Bitcoin to the moon. Well, they don't want to release free money into the economy again. They want to control how it gets released into the economy. So they're going to put controls on the money, and that means where it can be spent as well as where it cannot be spent. And so the central bank digital currency project is going to allow them to do that. So you'll be able to spend this money on food, right? So that means, when the UPC tag everything, it's gonna the CBDC currency is gonna like pay for everything except for these things that are not on that list, right? And then those things are just not going to be able to be bought. Like you scan hairspray, not on the list, right? The cashier is going to put it into another
How do you
cart,
feel
right?
about that? Because I mean, at the start, I like the decentralization nature, and yet when we speak of control, we're talking the exact up. We're talking out the other side of our mouth because it's the and and at the end of the day, you're talking about governments having this type of. I guess the example of PPP. I mean, that example I assume would be fine. I don't know. I just, as the radical libertarian I am, I I have a hard time being comfortable with government saying, starting to itemize expenditures. And yet, what's the alternative? I'm asking myself a rhetorical question. Literally, tons of waste that has happened in PPP and the fraud that came part and parcel with the lack of control that they currently have. Um, Shit, I don't know. Again, I've just walked myself into two. I don't like either option.
Well, so here's my thought on that. The PPP, the government gave you that money, so maybe the government has a right to control that money.
There we go. I
But
like to simplify that. Yeah, that's a good simplification.
but the money that I earn,
Yeah,
the
you can put
government doesn't have
stipulations
to.
on giving. Yeah, that seems part less logical.
Yeah.
Like a
So, but
trust.
if
It's like
I
I can give you this 600, but it's for XYZ. Yes, I like that. That's
right,
essentially a trust.
right. But if I earn the money from my job, the government doesn't have a right to say how I spend it
I
at
like
all.
this distinction. Okay, now I'm feeling a lot better. You're speaking to my fear, and yet also to my radical libertarian tendencies. In that you had me at decentralization just by in and of itself, because hence the third party's out, and the third party being the government. Um, so on private proceeds, private or money not issued by the federal government. Let me be specific. No, no controls. However,
Right,
PPP, they can stipulate whatever they need to stipulate, and I can choose to partake or not.
right, right. And then yeah. So that's what they like about
Feel a lot
you.
better now. I was got myself nervous there for a second.
Well, thing is, in Congress, you got to think that they're probably thinking like that too, right? Like one side
Well,
of the House
that's in the
wants.
back of my head. That's exactly one thing. That's the unconscious thing I've not said, or the conscious on my part. But the minute the government gets these type controls, where the hell does that go?
Exactly,
I'm
right,
already two
exactly.
steps ahead. I'm fearing something in tomorrow's tomorrow, but nonetheless, it's a still existential fear right now, at least for a radical libertarian.
Right. So I have to agree if the government is trying to um, it's trying to spurn. That's not the right word. but if they're trying to encourage spending for some economic purpose or whatever, they have a right to say, okay, this is not to be used for guns, this is not to be used for drugs, this is not to be used for medical, it's not to be used, it's to be used for food, it's to be used for whatever, and it has an expiration of 2 weeks. Why? Because 2 weeks you're going to get another money, right? So we want this spent, not saved. Okay, that's because you gave it to me. But if I earn it, there's absolutely no control whatsoever that should be put on it. I can spend it how I want. I can save it how I want, whatnot. Yeah, right. Um,
Yeah, I feel a lot better about that. How do you see the utility of Bitcoin being improved moving forward? Let me ask that a different way. Not utility, volatility, because I think volatility will answer a lot of. I necessarily won't predict it to get mass adoption, though that is my hope. But I think if it was less volatile than it is, someone like me
yeah,
that can take a lot of risk, I don't think anything of it. I buy it and I forget about it, and that's kind of the best investment strategy I've had. Not this micro everyday checking prices and signals. I think that's terrible. So that sounds like a fast way to be stressful to me, or stressed out, regardless of the security, commodity, or currency you're talking about, or the asset you're talking about. I'm having to check it every day, which is again what I'm saying not do.
right.
But if it was less volatile, I'm assuming that, or if it was, yes, less volatile, there would be, because that article that I cited earlier and I shared, the intent is still there even now, even post FTX, meaning Americans are, their sentiment, they were either pro or anti buying Bitcoin in January, and they're pretty much the same as of right now in December. A lot of the, not articles we've referenced here, but a lot of that hesitation is the inherent risk of the volatility. One day you're worth this, one day you're worth that. And just people that do check more often than I do, that tends to stress them out.
Yeah, yeah, yeah. So, so yeah, a couple things about that. One is when you're in it for the long term, you do tend to check it less often because you
And
just
that
have
has
a
been my
long
strategy,
term.
and it's worked perfect.
Yeah, yeah. If you have a long term thesis, you don't care. In fact, you don't even want to check the short term because it's just going to give you anxiety over a reason that you don't even need it because you
Sorry to
just want
interrupt,
to
but
check.
Warren Buffett did say invest in things you believe in. Well, understand. So I might be lost there. I might not fully understand, but I understand enough to know that, well, uh, do I believe in Bitcoin essentially? And the question is kind of implied, like, say 10 years out. It's like, yeah, I think so.
Yeah,
So therefore, buy today,
right,
forget about it.
right, right.
Hence,
Yeah, yeah,
basing
yeah.
the decision
Exactly.
to buy on a belief of, like, do you think they're going to be around? Ask that about any security too. It's like if you're buying, on the stock. It's like, do you believe in this company? If so, buy it and forget. And again, I know some don't do that, or majority probably don't.
Um, yeah, yeah. Uh, so in in the environment we have right now with it was up until recently cheap money, which was low interest, which means
Hmm.
the only way you can make your money do anything was you had to put it at greater and greater risk to earn a return. So what that did is that put people further out on the risk curve, and when you go far out on the risk curve, you're speculating more and more and more, right? So you
Yeah,
basically had,
that pendulum moves, and yeah, you're right. Together, more risk, more
yeah,
you're venturing in speculation.
yeah. So what you had is you had your value investors disappear, right? Because value investors look for the long term, um, but the long term, um, if you're
By the
living
way,
in
I feel
a,
bad now that you bring up value investors. I'm quoting Warren Buffett, and we're sitting here talking about investing in Bitcoin. Yeah, he was one that you're referencing here, disappeared. I don't recall, but I don't think he's a fan. But you just described that. He's a
no, no,
value
no, he's
investor.
not. No, he's called Bitcoin rat poison squared. So
But
he's
but
not a
that's
fan.
kind of to your previous statement. It's kind of moot now because it's like your previous statement was value investors are out. This is not their lane. So it's like, of course, he's going to not like it.
Right. Well, so with Bitcoin, basically is value investing. because you're looking at the long-term thesis, you're looking at the macro um, conditions and where things are going to go in 5 years, 10 years, and you're saying, okay, what are out of all my assets, which one do I think has the greatest potential? So, looking at like the major assets, real estate, equities, bonds, um, commodities, uh, those would be the major ones. Which one of those do I feel is going to have the greatest possible potential for growth in the next, uh, let's say 5 to 10 years, right? So if you look at that, like, well, I don't know, real estate is, well, it's could be short term, but we don't know population. uh, what's the population going to do? Is it decreasing or is it increasing? What is going on with real estate? Like you gotta look at that. You gotta plant your flag if you think that that's going to happen. What's going on with equities? Um, we're increasing interest rates. We're looking at a recession. If you invest now into equities, I don't know, is it going to collapse and then you're going to have a 30-year um, bear market, before it returns to these levels, or a 10-year bear market? What about bonds? Bonds, they never pay out much anyway, but right now they're not even paying enough to keep up with inflation, so they're out. So what about commodities? Well, com- I don't know. Commodities being metal. I'd say that's probably a pretty good one if we continue going towards electrical, electrifying the universe, because metals are heavily required for that. But are we going to continue in that direction? Because there's a lot of political risk with that, because all the mining happens in highly unstable countries like in Africa and South America and Afghanistan. That's where mining is. So, uh, that's a big risk. And oil, well, that's being attacked nonstop. So, where do you put your money where you've got um, where you can sleep the best at night? And then you look at, well, I wouldn't say cryptocurrencies, but with Bitcoin, it's not going anywhere. The United States may not like it, but you know what? El Salvador, Africa, Switzerland, Malta, Portugal, a growing list of countries are adopting it. So even if the United States doesn't like it, it doesn't matter. It's not going anywhere, because on a global scale, the United States is only one voice, and the United States is actually getting, I don't want to use the word weaker, but it's losing its hegemony and control. So it may push it out,
People
but when
are
it pushes it out,
less, people are more invigorated to, or well, I won't say invigorated, but they are more comfortable going against, so to speak, whatever the U.S. may or may not say.
yeah, I, you know, in the environment of the last 10 years, I'd say that more and more, whatever direction the media goes, I think the opposite is the better direction, right? Because they're always trying to push some agenda, and that agenda is usually to fleece me. So if I go with the mainstream, then I'm probably going to wind up on the short end of the stick. Is the way I've kind of discovered it. So I'm with you on
Well,
that. What
when
about?
you follow the masses, you remove the M, and that's who you find out who you followed.
Yep.
And that is
Yep.
especially true with mainstream media. And I believe that is the general sentiment all the way around.
Yeah. Yeah.
Of course,
So
who the
I,
hell am
I
I? I am definitely not objective in saying that, though I like to think I am. But as I've declared, I'm a radical libertarian, so therefore I cannot be objective saying it. But I think I'm hitting
right.
the general consensus on. I'm hitting what the room's thinking.
Yeah. Well, so with volatility, so volatility is a byproduct of wide stream adoption. So so right now, I think it's 3% of the world um, owns Bitcoin. So you're talking 3% of 8 billion. Um, I don't know. What is that like? 30 million, 32 million. So it's a very small percentage of the population, and of that, there are concentrations of owners, which are much smaller than 32 million. So most of those 32 million just own a couple of sats, right? Like several $100s of Bitcoin, not whole Bitcoins at a time. So you've got a lot of uh, concentrated liquidity. That's what causes the volatility, is these concentrations of liquidity. Once you have wider adoption, and once sovereign nations start trading in it, then they're not selling it on the open market. They're trading it for goods and services. So that means I'm exchanging my Bitcoin for, let's say, oil or for wheat, right? For for energy or for food. I'm going to buy it from you. You're a provider. I'm a consumer. I'm not selling it on the open market. I am exchanging it to you. So it removes volatility because that Bitcoin never even goes on the open market. Um, One of the other things that's causing volatility right now is because it is a such a concentrate since there's a large concentration of the 30, let's say 32 million owners, and the Bitcoin is concentrated in uh, maybe a couple thousand owners, meaning companies and exchanges and a couple of individuals, then it allows the volatility, but it also, there's paper Bitcoin out there. That paper Bitcoin is being created through ETFs from, because when you buy Bitcoin on an ETF, you're actually not buying Bitcoin, right? You're buying a promissory note that you own something that will act like Bitcoin, but it's not Bitcoin, it's paper Bitcoin. Well, that paper Bitcoin on an ETF is being sold to someone like BlackRock, who is shorting it. So that's also helping to drive the volatility. Well, as Bitcoin gets more adopted more and more, and there's less of it in the market, then it's going to stabilize the volatility because there's not going to be that much, like the paper Bitcoin is going to have less and less of an impact. So Bitcoin is not really designed for ETFs. It's designed for a bearer asset to actually own it and hold it. Everybody wants in on whatever. Like ETFs are designed for cryptocurrencies, making something out of nothing and watching it go to the moon. But that's really not what Bitcoin is for.
So you believe in I like that one soundbite I'm taking out of this for sure is you believe Bitcoin is a value investment. I just like the way that sounds. First off,
Yeah. Yeah.
but yet not designed. Hold on, let me throw a little curveball of your own words, but not designed necessarily for the ETF trading.
No, it's not. Well, and you can't trade it as because you hold your keys, and how can you do that on an ETF, right? So, um, yeah, like I don't know, like an ETF is just an electronically. It's not really an ETF. It's a ETN, right? An electronically traded note, and that note is like pegged to the price, and you can sell into it, or you can buy into it, and you can sell out of it, but you never really owned a Bitcoin. So somebody who's got their money in an ETN or an ETF, they're they're not really owners of Bitcoin. They're just buying and selling the paper product, and that paper product is being used on two sides. So once they have a buyer on one side with the ETF, then they have a seller on the other side, and they're shorting it. So somebody who's in an ETF is actually helping to drive the price of Bitcoin down.
What do you recommend for people like me? And I guess and I'll try to wrap up here. If not, I can keep you all night. Um, that now they've heard this and they want to get into mining. Where do they go? How do they contact you? Well, let me start. Where do they go? Second, can they get a hold of you? And I guess I'll stop there. That's profound questions in and of itself, especially the first one.
Yeah. So, um, yeah, I would say, I mean, obviously, I should be here shilling my own stuff, but I would say don't go to me first. Go out there and try and find like the machines and the hosting facilities for yourself, and get like price quotes and find out like how do you go about it, and expose yourself and find out how do you actually buy and sell this stuff, and how do you get it all started. Do all that on your own, because what you'll end up doing is going, yeah, it is kind of confusing and a little bit scary, and I don't really know what I'm doing, and I'm not playing with lots and lots of money, but I'm playing with enough money that I should be cautious and get some good guidance. So do that first, and then go to fatcatmining.com, and then look me up, because that's where I am. I'm also at btcpartnersgroup.com, so either one will get to me. Um, and then we'll actually have a one-on-one and find out what you really need, and figure out ways to help you, whether it's buying 5 to 10 miners, or um, or buying 100, or even, man, I'll tell you what, this last one of the reasons I've been so freaking busy for the last month and a half was there was so you had mentioned Celsius, right? Celsius
Yes,
collapsed.
I use their network.
Yeah, they were one of the first capitulations, and when they did fall, they had that put a bunch of machines out on the market. So they had like 80,000 machines that they were trying to put somewhere. That's one of the reasons why they capitulated, because the price of Bitcoin went down. They pre-bought machines like last year when machines were at $10,000. So they put millions of dollars into it, and then those machines were pre-ordered. So they had the loan, but the machines weren't making any revenue because they weren't even like shipped yet, right? So then by the time they did get shipped, the price of Bitcoin had dropped, and then they had to find places to put these machines, and so they actually sat in a warehouse with these loans, overhead, paying the bills, and Celsius just ended up collapsing. So that started to drive the price of the machines down, because there was like a glut in the market, right? A supply and demand. Um,
All of a sudden, an influx of equipment.
yeah, and then once that happened, it was like a cascading effect with these other things that Three Arrows Capital, and Terra Luna, and finally FTX. But Compute North was like the big one. Well, when Compute North went down, all their customers that were hosting with them, they had to go find somewhere else. Like, you don't have to leave, you just can't stay here, right? So they had to take their business, and so there were 230,000 machines between two clients. No, not 230. 20. Wait a minute. 23,000. Yeah, it was 23,000 machines between two clients, and I was trying to find places to put those machines. Um, and so, no single place can take 23,000 machines, right? So it meant trying to distribute these machines over many different companies, and that just took a lot of work, because these Compute North orphans, they weren't the only two, right? There were a lot of others. So there was competition out there looking for space, and it was yeah, it was keeping me extremely busy, wearing me out.
Do you see the price prediction? I see it's going up. So ultimately, the news is people shouldn't be alarmed by these clickbait headlines overhyping FTX more than it is. It seems like most of the academic sources are all in line with what you're saying, and that it more so because of FTX, and that it's not the Armageddon.
No, it's not, because mostly affects crypto. There is residual because people are confused on what the differences are between Bitcoin and crypto, but mostly it's a crypto impact, and it's actually good for the industry because the it got rid of the waste. So that means more capital now can be put to good uses instead of being wasteful uses. And maybe people will learn that digital assets aren't for speculating. They're bare assets. You invest it for the long run.
Yeah, I'm looking here these price predictions. Uh, Let me ask some jaded, targeted, so I can get some again, good content, just one-liners type thing. Um, your predictions for you can see here. I guess I'm cheating because I'm showing this sheet first. However, I don't even know how I would discount, and so I don't know how reputable this source is. They seem to be overall positive, and as to your point, they're speaking to Bitcoin specifically, so they're really not even addressing FTX because again, it is a separate issue, which doesn't really impact Bitcoin other than the people that probably aren't in Bitcoin anyway. Where do you see
Right.
Bitcoin going, when and where, and reaching what at what points? When's the 100,000 coming?
Yeah. So the halving is well. So Gary Gensler is not only the guy who's charged the SEC, but he used to teach MIT courses on Bitcoin, so he knows how it works, and he also knows how to kill it. Um, at least how to kill it here in the United States. So I don't know if that is what his goal is to do, but it certainly seems like it. So um, the three things that really impact the profitability of Bitcoin mining are the cost of energy, the difficulty adjustment, and the price of Bitcoin itself. So if when the price of energy goes up, then it greatly impacts the profitability of Bitcoin mining. So we're looking at an environment where we have energy crisis all over the place. It's actually self-inflicted, but we have energy crisis, which is driving the price of energy up. So that's driving the profitability down. Then the difficulty adjustment, well, that was going down because so many machines kept coming online. Well, the reason the machines kept coming online is because of all these pre-orders that had happened last year, and they were like a year out delivery during the bull market, and so those are coming online, and those are driving the difficulty adjustment up. Because what the difficulty adjustment is the more machines that are plugged in, then the less profit there is per machine, right? So it's a mathematical adjustment. So if you have more machines, you have more. The profit has to be distributed among the more machines, so it means less per machine. Well, because of the capitulations we've had, now the difficulty adjustment is actually starting to go the opposite direction. So the difficulty adjustment is actually something that if you can hold on and outlast everybody else, it's going in your favor, because that is like the survivability of Bitcoin. So let's say companies just go out of business, go out of business, go out of business. Well, if you that means the difficulty adjustment is going down, which means the profit is going up. I think I might be losing everybody because I'm losing myself. But if you can outlast everybody, that means you're going to be making the most money. So the way to do that is to get energy at the lowest cost. That's how you survive the longest. Um, so that that's one of the things I do is go out there and find these type of clients. But the other is the price of Bitcoin itself. So if you can drive the price of Bitcoin down, then it will kill the industry, at least here in the United States. So push energy up, push price of Bitcoin down. That is the um, that is the battle plan that is happening right now. So the model you showed me is positive because Bitcoin has number go up technology built into it. Supply and demand, network effect, all that's in all that's actually increasing, and it should be pushing the price up. But the paper Bitcoin that I spoke about with the ETF and the shorting it on one side and selling it as paper Bitcoin through the ETFs on the other side, that's helping to drive the price down. Um, and and so these other things that are driving the price down are things like the FTX collapse, Celsius collapse, Compute North, because it's just bad news on the industry. So with that, now we've got this race to regulation. They didn't want to do any regulation, but now that we have a Republican House coming in, and the three-party rule of of the government is going to end, they are trying to push through a regulatory framework, and that is probably going to greatly impact the price of Bitcoin in the short term. And depending on whether it passes or not, it could impact the price of Bitcoin. So it's hard to predict, but I would say it like this. So in the next administration, well, not the next presidential administration, but in the next congressional administration, the anything that gets passed between now and January 20th, even if the Republicans don't like it, they're not going to be able to over undo it. So because they only own the House, and the president would have to sign off on it, and the Senate would have to. So if they can get something pushed through now, then they're not going to be able to undo it until the next presidential administration. So that's what they're pushing for. So if they are able to push it, then I see a prolonged Bitcoin winter. If they do not get to push it through, then I see Bitcoin basically going to the moon, because what it means is the Republicans are not going to. So Bitcoin tries to not be political, but when you look at both sides, it seems like the Republicans are more free trade and pro Bitcoin than the Democrats are. So if they cannot push anything through by January 20th, it means nothing's going to stand in Bitcoin's way. So that's going to be bullish for Bitcoin, right? It'll be bearish if they are able to. Does that make sense? Was that a prolonged answer?
That's perfect. And actually, that's what I was hoping you would say.
So I will say this. So I've been giving that a lot of thought, because they're going to do everything they can to push this before January 20th. But we have the holidays. Congress usually has a recession. Well, I don't want to say recession. They usually take a recess for the holidays, so that means they don't really have until January 20th, like business days. They have, I don't know, one more week, and then they're going to pick it back up 2 weeks after the New Year. So they really don't have much time, and that's a big positive, because it's going to be very hard to push something in 3 weeks to push a bill, even though Senator Warren has already come out with one. I don't know, unless that thing is run through with Greece and everybody agrees to it, signs off on it. I don't know.
And ultimately, that
I
is
don't
the
think.
good thing. In this case, the government's inaction is good action.
Yeah, yeah. So you know,
If you follow Milton Friedman, which believes that the government in everything, could, if you put it in charge of the Sahara Desert, in 5 years there'd be a shortage of sand. I guess that mantra of government's inaction
right.
pretty much applies across the board. Up there's my radical libertarian showing through.
Yeah. No, I'm with you, man. Yeah. Um, um, so yeah, I agree. The only time that they have acted fast is uh, pandemic. They seem to all be on board, right?
That
And
almost
they,
makes me skeptical just for its own reason. How you just frame that, and that, yeah, the government's usually never quick, and yet all of a sudden we were. That is
yep.
enough
And
reason
so,
for me to. There's my skeptic flag alarming.
yep, your skeptic is shining through.
Yes. I don't know if anyone can sense, but it's hard for me to hide. Hide. I don't even think I'd do it. I shouldn't even use that word because I don't.
No. Um, so I'm hoping and praying that just there's not enough people there for a quorum. That something else.
Do you know?
Uh,
Is there? Let me check real quick. Do you know the name of that bill? I was just wanting to see if I could get a tally already, if there was
um,
one.
no, but you can go on whatever it is, whatever that website is. I can't think of it off the top of my head, but type in Warren and crypto, and it'll probably pull up. Yeah, I've seen the bill, just the front page of it twice already. I don't really want to read it or give it any. I don't want to waste my time with it
I'm trying
doing it.
not to, and actually, I'm being very. If I do give myself credit, given the source of who this bill, I just wish you would not speak, but I'll just leave that to that. And just that's a taste that my earlier comments were actually polite,
Well, so the thing
especially when
about
it comes to
Elizabeth
economic
Warren,
policy.
I don't think many people like Elizabeth Warren. So even though she's a Democrat and
It's beyond that.
there,
It's
well, I don't mean to be like um, um, picking parties. I'm just saying, even though she's a Democrat in
again, that's what
a
I'm saying. It's beyond my frustration serves when she talks policy, especially finance.
no, I just mean all three, the House, the Senate, and the presidency are all Democrat. And even though she is a Democrat, there's enough Democrats in the Democrat Party that don't like her. Manchin is one. He's probably the most um, pronounced one. So he's probably not going to sign on board with her. And so they're not going to be able to pass it in the Senate. So they're probably going to come up with some, like tomorrow, you'll probably see some announcement. No, not tomorrow, Monday, see some announcement where somebody in the House has pushed through an identical bill. So you're going to have two bills that are identical racing through, one through the Senate and one through the House, but you're probably not going to be able to get consensus enough to be able to sign off on it. Joe Manchin, he got screwed with. He did agree to the, what was it, the Inflation Reduction Act, and got screwed on that. Um, and then Sinema has already said she's leaving the Democrat Party, so they've lost. So they're losing. So I don't think they're going to be able to get this to the president in time.
Yeah, I just cited it in the chat that'll be for reference later when people view. Uh, Senate Bill 4356, the luminous, is it Gillibrand or Gillibrand?
Yeah,
Responsible Financial Innovation Act. And
right.
my
So
use
now
of the
that is
term, playing on your former statement of, when the media says something, you kind of go the opposite. But I do the same with government. And when I see responsible, what I read, my subconsciously, consciously, subconsciously, however that goes, is irresponsible. That's just
yep. Well, so Gillibrand and Loomis, um, that probably is the better uh, regulation, but they've been sitting on it. They're not pushing it through because they don't want regulation. Because what they want is this regulation, the one that they want to push through, which is the one that Warren is bringing
Yeah,
up
the
now, right?
partisan
Because
one that you're referencing. Let me
right,
see if I can.
yeah. So the one that was actually responsible, they didn't
Of
want to
course,
do
the
that.
Guardian cites it as Warren pushes bipartisan bill to regulate crypto. For that this is not bipartisan. That's a wrong use of that
Not at
term. The
all.
Guardian.
Right, right. It's not even partisan. Like it's not even her party is going to uh, come on board with it 100% because you got to look at the politics in the House. Not in the Senate because the Senate is not changing hands, but in the House, um, Democrats are losing um, their party, not their party, they're losing their committees, right? So that means they're losing their power. So the people that are
Yes,
in
and
the
this
House,
bill is way too power because it's what it's doing is essentially giving power to the Commodities Future Trading Commission. And to your sentiment right now to this point, that is not the sentiment the general public of either side is willing to give. Too much power. I think what this bill and the reason it's stalemating, you correct me, I haven't read anything on it, is because one, it's way too much power at too much time over something that clearly neither side really knows much about yet, and it's just too much
right?
regulation, if you will. It's too much in one direction.
Yeah, but the House has to approve it too. So if the Senate approves it and the president approves it, the House has to also approve it. But in the House, right now, the Democrats are in charge, so the Democrats can sit on all the committees, right?
Right,
And they
right.
get to assign who's sitting on what committees. But once it switches, it's the Republicans who get to decide on who's in what committee. And that means that there's a lot of political shenanigans that can get played. So with the House, now you've got Democrats who don't want to lose their committee seats. So
Something too drastic
they
in
will,
any lane is not smart at that time.
right. So they may try and push it, but they can't push politics. Like politics is ego driven, and you can tell people that you're going to sign this, and people are like, well, if I sign that, I've been told that I'm not going to be allowed to sit on my committee seat that I've been sitting on for 4 years, and I'm not going to give that committee seat up. I've already made a deal with the Republicans; they're going to allow me to remain in this committee seat, right? So there's politics that get played. So it's like in the House is not going to be the walkthrough that it is, and the Senate is not going to be the walkthrough because Mitch McConnell, I mean, not Mitch McConnell, Senator Manchin is already going to say no. Like, I ain't doing nothing like this. Um, so it's like, it's not a walkthrough in the Senate and it's not a walkthrough in the House. And Senator Warren, you know, good luck with that because nobody likes her. So I just don't see it. I don't see it happening. If I was to put my um, put money on a race, I would say it's probably not going to succeed. But but
Are
they
there
have
any elected representatives sitting right now that are pro that we can look for in the future to levy on certain committees or not levy, but would hope to be on certain committees that would push if regulation must happen? Who would we want? Elected representatives sitting there, kind of handling that conversation since we are at the dawn of that
well
conversation.
yeah well Lummis definitely and Toomey Pat Toomey is pro Bitcoin. I don't know the list of names. Ted Cruz is pro Bitcoin. Pat Toomey. These are ones that I know, and I know that there's several others. I think Bobert is also, but I haven't really heard too much about her. I think Kristen Sinema is also pro Bitcoin. So you can say basically the younger generation is,
There you go. Yeah, split it that way. It's better split by age than by party.
yeah, and it's not like the older generation is uh, is is getting stronger, and it's the younger generation that's going to dominate. So this is their one last stand, and if they don't win this, it's over because they're never going to take majority again. So it's almost like this is a throw of death for them. They have to do this. But even in those conditions where they have to do this, I don't think they can. They're going to make the most of this FTX debacle, and that's really what this whole thing was contrived for, was a Trojan horse to be able to bring this crisis, or bring this crisis to this point. They probably would not have pushed FTX for this situation to happen if they were not going to lose the House. But knowing that the government is changing the way it is, I think the whole thing was choreographed and orchestrated for exactly the way it happened, so that they could bring this
I want to share my
where they.
screen for one headline. I'm not going to
There you
comment
go.
on it, but I do want you to see this. That I won't, because again, I'm way too jaded. But I would like you to see this and see if there's any commentary you can add to this particular headline, which is by Fortune. Again, more of a popular publication. I don't always say, I wouldn't say them as scholarly, is what I'm saying. But this one, it's popular for as relative to what we're speaking of. And it was according to Open Secrets, again, the DC based nonprofit that reported, and I got this from an earlier one, that
Yep.
the FTX, I'll just highlight that. He was
Yep.
second only to, well, of course, he's
Yep.
second. But is there anything to add to that, or do you think those headlines and that just really captures it?
So I would say, so what this is Fortune magazine, which is interesting. So
Right,
you
right, and
probably won't,
right.
yeah,
Not what I'd
you
expect them
probably
to
won't,
write.
yeah, you probably won't see this in the mainstream news because, but what I would say is Democrats want to distance themselves as much as possible from this because,
Look at look at this headline right here. Wow, you really quoted that, and I didn't show you that headline, but look at that headline as you're saying it.
yeah, right. So it's going to make it more difficult to pass this bill um,
I think the reason
because,
I'm sharing that in relation to what we're speaking of is it's almost that's when you put it in that backdrop, assuming the masses still remember and vaguely this FTX debacle. It's like that. You're not passing some crypto overhaul.
right. I mean, they're going to want to, Congress wants to look like they're doing something, but um, when
Maybe
it's
they
the
need to look at
Democrats,
agriculture. They need to look at it. I don't know, but there's plenty of other topics. But I don't think this one's the one you're the subject matter expertise on.
and I don't think that people are thinking that the ones who are taking all the money behind under the table are the ones who need to be fixing the problem when they were the ones that basically created the problem. So um, I think they're going to have I think they're going to have a hard time, especially in the House.
You handled that
Um,
very, very stoically, by the way, because I was trying to bait you hard to really get into some adjectives, and you didn't fall for it. So well done on your part. But amateur journalism on my part, because I guess I gave away the house, before I could set the bait, hook, line, and sinker.
yeah, I'm glad I didn't fall for it, Jason. Well, you know why? Because I was planning on going for a walk after we. You know what? I've been so busy the last 2 days. Yesterday was raining, so I didn't go for a walk. Today, I was just so busy, and I only went one lap around the lake, so I was going to go for a second lap. So the reason I bring that up is because usually I'd have a glass of whiskey. I mean, a couple shots of whiskey with you, but I didn't because I was going to go for that walk. I didn't want to go for a stumble after our talk, right?
Well, I have Jameson sitting on the counter and moonshine. If you're ready to forgo the walk again, and just say that it's raining on the inside.
Yeah, no. So had I been kicking back on the shot glasses of whiskey, I would have probably fallen for that setup the trap you set me up
Yeah, I'm
for.
trying
But
to get you to read
I
like
did.
very jaded headlines. They weren't hiding which I give the journalists credit. This isn't actually a partisan or bipartisan issue. It's a simply FTX's founder, which is in turmoil, is the second largest donor to the Democratic Party as in the last election. That's a fact. That's not negative, particularly to the Democratic Party, or positive to the Republican. It's just simply he was the second largest donor.
Yeah. What was the? So you showed me two headlines. Who published the second
Both were by
headline?
Fortune.
Oh, okay.
One was the first one, the one that I didn't show you the headline until later, was the Fortune crypto specific, like their section dedicated to talking about crypto. And oh, we've lost him. Good gracious. See if we can get him back.